Hello, everybody. My name is Nicole and I'm a technical analyst and private investor. And today, I thought I'd look at all things US of A, in that President Biden made a big speech yesterday to commemorate his 100th day in office. And I don't know about you, but what with him and House Speaker Nancy Pelosi, I find it rather depressing that these two geriatrics that know nothing other than the Washington swamp are here to lead their nation out of the biggest pandemic they've ever seen. So let's look at US stuff. My first chart, by the way, this week, they're all weekly charts. So trying to capture the sort of movements over the last 100 days relative to where we were before, the year before. So first chart, there is the yield on a 10-year US Treasury note. And you can see that at the moment we're trading at 1.65% with a high of 1.77%. And definitely the yields have backed up. That means the value of a bond has dropped. Yeah, prices move inversely to yields. And we've gone from 1%, as I say, up to a 50% retracement of the previous drop in yields that started slowly in the fourth quarter of 2018. And basically, we've undone the drop in yields on the first quarter of last year when the pandemic struck. What do I think of all of this? Well, I think the stalling here at the 50% level, and it's now 8 consecutive weeks that it's done so. A hint, and just be prepared that sometimes markets change trends, not with a bang, but a whimper. So going on to my second chart, which is another quite different one here, it's the Russell 2000 index. And you can see that very much so throughout the whole of President Biden's term, this index of small caps has been moving higher. I've deliberately picked the small caps because I wanted to avoid any index that, quite frankly, contains a monopoly in all but name, and you know what I'm talking about. Now here too, you'll see that we've stalled at about the 2,250 level for 12 consecutive weeks. I mean, it's not struggling as such, but it's just looking rather long in the tooth, I would suggest. It's perhaps what they call a pregnant pause. It's a candlestick pattern, not here on this one, but on a higher time scale, candlestick chart pattern called harami, which means you're just taking a breather and you're thinking, is this sustainable? And can we carry on in this direction? That's what we've got on this one. And then my third chart is an easier one. Again, it's an Ichimoku cloud chart. It's the dollar index. And you can see that Mr. Biden did give the dollar index a little boost for 6 consecutive weeks. Those are the sort of green candles that you can see. But we've sort of given up all of that at the moment. Above all, we're way below pre-pandemic levels, i.e. the dollar is weaker than it was before we got the confirmation of the coronavirus 19 infection. And everything on this chart suggests that we're looking to go lower, i.e. I'm still looking for a weaker dollar, even though my moving averages are a bit of a mess, because again, there's no precious little traction in this one, quite frankly. And so I do think we'll go lower, but the trouble is, well, it's not trouble. The reason we've stalled as well, like the Russell and other stuff, is that we're on some pretty key long-term support, roughly around the 90 level. So yes, I think it's going to be a difficult nut to break, but I think we will continue to go lower. So there we are, Mr. Biden's report card.